Assalamu alaikum, everyone. My name is Edward Willis. I'm here on behalf of the Graceline community. I'm going to spend a few minutes talking with you about the business of banking, and specifically why a bank like Graceline Federal Credit Union is needed and how we can actually help the community. An investigation of banking practices in Dallas, Texas found that south of Interstate 30, where most of the residents are Black or Hispanic, many bank branches take deposits there, but those same banks don't lend money out to the customers in the surrounding area. Just some quick stats. 43% of Dallas's population lives below Interstate 30, or about 600,000 people. And that same analysis shows that they're only getting 26% of any kind of bank loan. Additionally, when you look at bank servicing, there are roughly 300 bank branches north of I-30, less than 60 that are south of I-30. And over a 2-year period of time, 2018 and 2019, Chase Bank made 4 home-related loans in Southern Dallas. Bank of America made 6. In comparison, if you go 6 miles away, Chase and Bank of America combined made over 400 home-related bank loans. You know, banks they're in business to make money, and nobody is going to tell them that's a bad thing, nor do we consider that a bad thing. But they do have to follow certain rules and guidelines. And those rules include the Community Reinvestment Act. It's a federal law that says banks are required to meet the credit needs of the entire community and reinvest part of their money in minority neighborhoods that have long been underserved and ignored. We're here in 2021, and these are what the stats say. Black households are nearly twice as likely to lack access to credit as white households. About 15% of Black households were deemed credit invisible or totally unscorable, couldn't even get a credit score. Obviously, this prevents a lot of socioeconomic mobility that is going to come through business loans to expand a business, hire new individuals so that they can even contribute to the society. And also through mortgages, which for a lot of us is our primary means of creating wealth. Black-owned businesses are turned down for financing twice as often as their white counterparts. And when they do get a loan, typically the interest rates often are twice as high. So the factors that starve Black-owned businesses of capital, this permeates down into society, into our society, into African-American neighborhoods. And, you know, our high unemployment rate, low home ownership rates, at least in regards to other races. We have seen improvement, obviously, since the 1950s and 60s in the rate of Black home ownership, but we still trail our contemporaries of other races. And what I believe, and what many people are starting to find out, is that the boogeyman, or the elephant in the room is another way of saying it, is these traditional credit models that use regression math to make inferences based on relationships between just a very few variables. There are practical limits to these regression methods, basically because of the fact that there are 10 or 15 factors that they include in creating a credit score or determining credit worthiness. And as we found out in discussions with people in the industry, these are very difficult to update. And another factor that's in there is this use of zip code data. Banks and credit unions estimate the race of borrowers, or they guess at the race of borrowers, I guess is a better way of saying it, using an algorithm called BISG. It's Bayesian Improved Surname Geocoding. It was developed by the RAND Corporation I think back in around 2006, maybe 2008, somewhere in that neighborhood. And it was actually developed for the health insurance industry. It was not developed for financial services. And it gives a grade based on your surname and the zip code that you live in. And that grade can, in many cases, decide whether or not you get a loan. The zip code that you live in, you can have a 700 credit score and be turned down for the same loan that somebody with a 630 score has, simply based on zip code alone. So there's got to be a better way of determining credit worthiness. And, if you have kept up with some of the minute changes to this point that have been made in credit scoring by outfits like Experian, that they're now allowing you to use things like your Netflix account or your your cell phone account toward helping you with credit. Some lenders are now starting to look at something I've long championed, and that is your rent payments. If you've been paying rent every month without fail, never late, for 17 years, you're a pretty trustworthy person. That I could probably count on you making a payment on your house the same way you would make a payment to your landlord. But for years, banks and credit unions did not take rent payments into consideration when they were determining credit worthiness. So a large part, at least I pray, of what we want to accomplish with Graceline Community Federal Credit Union is a major upgrade on the way that we look at credit worthiness of our shareholders. Share account holders, I guess, is a better way of saying that. And our idea and what we're really researching is the use of machine learning models to better predict delinquencies, defaults, but also to be a better predictor of those individuals who are capable of actually paying their loan back. We want to actually foster a more positive model. One of the things with machine learning models is they can ingest 100, anywhere from 10 to 100 times more data than these regression models do. So those things that I talked about before can be expanded. The use of things like cash flow, rent, utility bills, cell phone bills, even things like Netflix, to give you a better picture of that particular borrower and their ability to pay. And we think it'll widen credit access for low-income borrowers who've been pretty much left out of mainstream lending. And it really kind of gives us a new set of fair lending tools and practices that we think will make for a much, much fairer representation of an individual ability to participate fully in the United States in the financial marketplace. Obviously, in addition to something as forward-looking as machine learning, is that we really want to implement a lot more of the human element in making decisions around the financial institution and the communities that we serve. And one of the things that we are 100% behind is in each and every community in which a credit union is established, or in a region in which a credit union is servicing, that we have human beings as advisors who are part of those communities, who are involved in those communities, that know what those communities' needs are and are forward-looking enough to understand possibly what those communities' needs are going to be on down the road when their children and their grandchildren are the leaders of those communities. So we want that to happen in every community in which we establish a credit union. Local people helping our bank officers to make good decisions for the places in which they live. We think that's something that is lacking in the overall banking community. Most of the time when you go into a bank branch, they don't know the community. They're driving in from other places to a job. I'm sure they think they do their job well, and I'm not one to say that they don't, but they don't understand the community that they're serving and what the needs of that community are. We think our advisory panels, plus the ability to hire people who are part of those communities will lead to better outcomes for those communities, better long-term decisions, better financial health, overall economic health. And really and truly, you're really talking about the health of the human being when you improve that overall community situation financially. So we want you guys to join with us, whether that's financial contributions, word of mouth, anything that you can do, ideas and suggestions to help make us a stronger organization and ultimately a very, very strong credit union representative of our community, and one that can be a model for the rest of the financial service industry in the United States, especially, to really be the backbone of growing model communities. I thank you for your time. Obviously, Amira's going to follow me. Give her an ear. She has some fantastic things to say, and we'll be around for questions after that. Pray for us. Obviously, reach out your hands, give us your energy to keep us going. We're going to need everything that we can as we near this finish line of getting the charter. Again, I thank you. Assalamu alaikum.